Welcome back to JRNY TV, where we break down the latest in digital finance for everyone, no matter your experience level. And today we are diving headfirst into a headline that's been making waves. Could XRP really soar to $15,000 per coin? Well, at first glance, it might sound like a bit of a stretch, but let's unpack the factors fueling this speculation. Wall Street insider Jake Claver recently suggested that XRP is vastly undervalued, hinting that there may be a significant price surge ahead. He believes that major institutions, they are quietly stacking their XRP, positioning it as a cornerstone of international finance. Claver stated that the current price is merely a shadow of what is coming. Ripple's expanding partnerships with over 300 financial institutions worldwide, including a $10 billion investment from Japan's SBI Holdings, it underscores the sentiment, a strong sentiment. Additionally, Ripple's acquisition of Hidden Road, a global prime brokerage clearing over $10 billion daily, positions the XRP ledger to handle substantial daily settlements. These developments, they suggest that XRP is not just another cryptocurrency, but in fact, the potential backbone for the future of global financial infrastructure. As we delve deeper, we'll explore how Ripple's technology continues to aim to replace outdated systems exactly like SWIFT, and what that means for XRP's value. Stay tuned as we break down the implications of these moves and what they could mean for the broader system and XRP's price trajectory. Ripple's mission to replace SWIFT. All right, let's talk about one of the biggest narratives behind XRP's long-term potential: Ripple replacing SWIFT. That's right, that is not a typo. And Ripple, it's not just aiming to coexist with traditional finance. It is actively building a faster, cheaper, and way more efficient alternative to one of the oldest systems in the world for banking, SWIFT. If you're not familiar with it, it processes over $5 trillion with a T in global transactions every single day. That's right. It's the pipes of international banking, but those pipes, they are severely outdated. And we're talking about multi-day settlements, high fees, and a serious lack of transparency. That is exactly why Ripple has been trying to fix that with its on-demand liquidity system, using XRP as the bridge asset. And according to a Ripple senior VP, the company is currently in production of a next-gen replacement for the SWIFT system. Here's where it gets a little crazy. If XRP is used to facilitate even a small fraction of SWIFT's transactional volume, say 1% of the $5 trillion, that is still $50 billion in daily settlement volume. With XRP's current supply structure, that kind of volume could drive demand through the roof, and then some, and bring price right along with it. Ripple has been playing the long game, integrating with banks, partnering with governments, and now building an infrastructure that could actually replace one of the most entrenched financial networks in the world. And if that vision becomes a reality, then XRP at $15,000 doesn't sound like a joke anymore. It actually sounds like a calculated outcome. But the craziest part, Ripple's not doing it alone. Coming up next, we will break down how Ripple is now working alongside of, wait for it, ADA, Cardano, that's right, and what this unexpected partnership could in fact mean for the future of both ecosystems. Ripple and Cardano, an unlikely alliance or a master stroke. Now here's a crossover no one saw coming. Ripple and Cardano might actually be teaming up. Yeah, this could end up being one of the most powerful alliances in all of crypto. And we're talking about two of the most influential blockchain projects ever. One built for liquidity and cross-border payments, and the other designed for decentralization and smart contract infrastructure, possibly working together toward a shared future. I'm ready for it. It all started when Charles Hoskinson, the founder of Cardano, came out defending XRP's inclusion in the proposed US crypto reserve. And that alone, it tended to raise some eyebrows. Then speculation started swirling that Hoskinson might be in talks with government advisors aligned with Ripple to help shape the infrastructure for a US-backed digital reserve system. When asked directly if Ripple and Cardano were working together, Hoskinson, he didn't deny it. He actually left the door wide open. And who walked in? All of crypto. And that's all of crypto X or Twitter needed to start connecting those dots. So what would this even look like? Imagine XRP handling liquidity and instant value transfer. Well, ADA runs the programmable layer governing compliance, smart contracts, and tokenized assets. Together, these two could form a next-gen financial stack capable of powering central bank digital currencies, institutional remittance networks, and even tokenized real-world assets, commonly known as RWAs. It's not just plausible. This is in fact kind of brilliant. And here's the thing. Institutional eyes everywhere. They're already watching, and they have been. The deeper Ripple embeds itself into global banking, and the more Cardano continues to prove itself as a scalable and more decentralized ecosystem than the vast majority of its competitors, the stronger this potential alliance becomes. If they officially join forces, well, the entire market, it could reprice overnight. Up next, we are diving headfirst into the ETF narrative and how Wall Street is setting the stage for XRP's moonshot moment. ETFs, Wall Street, and the XRP supply squeeze. Let's be real. XRP has always been the underdog when it comes to the institutional hype. While Bitcoin and Ethereum grab all those headlines, XRP has been quietly laying the groundwork. But that is changing, and fast. Analysts everywhere are finally now openly predicting that XRP could lead the next wave wave of crypto ETFs, as regulators finally begin warming up the tokens with clear utility and legal clarity. According to recent research from Bitwise and other market analysts, XRP checks a lot of boxes that institutional investors, they deeply care about. Fast settlement, low fees, real-world use case, and most importantly, legal clarity post-SEC lawsuit. In fact, some analysts even rank XRP ahead of Solana and Dogecoin when it comes to ETF readiness. When the likes of BlackRock, Fidelity, and VanEck are all aggressively expanding their crypto offerings, that's no small thing. And here's where it gets even more spicy. If ETFs flood in, it creates a massive demand spike. Remember, XRP has a fixed supply of 100 billion tokens, a big portion of which is already held by Ripple and early investors. That leaves a relatively small circulating supply for the rest of the world to grab. Combine that with potential Wall Street inflows, and yeah, you get the big picture. A full-blown supply squeeze. And please do not forget Wall Street. Wall Street isn't just testing the waters anymore. A growing number of firms are starting to view XRP not just as a payment rail, but as a strategic hedge in a multi-chain future. If the ETF floodgates open and institutions begin allocating capital directly into XRP through regulated products, it could be the beginning of a new price discovery phase. One that leaves $15,000 sounding a lot less like a fantasy. Next up, we tie all the threads together and ask the big question. Is XRP actually built to handle a global financial reset? Let's talk final thoughts. Could XRP really lead a global financial reset? All right, let's bring it all together. We've covered the boldest analyst predictions, Ripple's ambition to replace SWIFT, the Cardano connection, and the brewing institutional wave led by the one and only Wall Street. So now the question is XRP truly built for a global financial reset? And honestly, the answer might be yes. Unlike most crypto projects chasing hype or memes, XRP from the jump was engineered to solve a real problem: global payments. While Bitcoin wants to be digital gold and Ethereum powers smart contracts, XRP, on the other hand, is laser focused on being the bridge from money. Fast, frictionless, borderless money. And if that financial system is indeed heading for an overhaul, whether triggered by de-dollarization, CBDCs, or macroeconomic collapse, XRP stands out as one of the few assets actually ready for that level of utility. Plus, the partnerships that Ripple has lined up aren't just with DeFi protocols or random altcoin projects. We're talking central banks, regulated institutions, and payment providers, all of which lay the groundwork, build tech, and have legal clarity that's finally emerging. XRP isn't just a speculative token anymore. It is a very serious infrastructure play. That kind of positioning in a world moving toward tokenized finance is exactly how an asset could go from under $1 to $1,000. Or, if the stars align, even $15,000. Now, obviously, nobody's saying that this will happen overnight, but if Ripple continues delivering on its mission and the institutional dominoes continue to fall as they seem to be, XRP, it could become one of the most important digital assets in the new financial system. But what do you think? Is XRP undervalued? Could it really lead a financial reset? Or is $15,000 still a moonshot and too far? Drop your thoughts in the comments below. We would love to hear your take on this. And if you got any value from this video, please make sure to like, subscribe, and smash that notification bell. You don't ever want to miss what's coming next on JRNY TV. Thanks for watching. We will see you in the next one.